Try the topic investment appraisal, capital budgeting. Right. The capital budgeting or investment appraisal. A very important lesson. Not only for advanced level, in university, probably you will learn investment appraisal for a 6 months time. Entire 6 months investment appraisal. It's that much important lesson. Right? In other syllabuses, in CA, chartered or wherever, right? The investment appraisal in management accounting, this plays a critical role. But fortunately, in advanced level, it's not that much big. It's a very big lesson. Each and every area we discuss is very deep. We are going to just touch the surface in this lesson in advanced level, right? But I'm going to teach you not all the stuff. The lesson for some extent, because if you know the real background of the lesson, I think that will be definitely important for you when you are following some professional courses or any other studies after your advanced level, right? So if I initially tell you what this lesson is, in management accounting, just remind the lessons we discussed. We started from introduction to management accounting, then material cost, labor cost, overhead cost. Then the last lesson we just completed, that is marginal costing or CVP analysis. This is investment appraisal. The investment appraisal, the capital budgeting, this is not to make short term decisions. If you differentiate the previous lesson and this lesson, the marginal costing or the CVP analysis is used to make short term decisions. You did many questions, so many questions. They are used to, in the CVP analysis, you made decision for the next month, for the next year. The maximum duration is 1 year time. But the capital budgeting means you are going to make decisions to the future for a long time, more than 1 year time. Probably for 2 years, 3 years, 10 years, 15 years, 50 years. Till the infinity, you can make decisions. There are some investment decisions, you have to make the decision till the infinity. You know the infinity. Do you see the infinity? Do you see the infinity? Has anyone seen the infinity? Have you seen the infinity? No. No one will see the infinity. Infinity can anante. Maharayatai. Some decisions there you have to make till the infinity. Right. So what are the investment decisions? Capital budgeting. You have to budget the future. A very simple example, you are going to purchase a machine. In many cases, for advanced level students, it's given to decide whether to purchase this machine or not. Purchasing a machine. Purchasing a machine. For next couple of years, you are expecting to use the machine for 4 years, 5 years, etc. It's a investment decision. You have to appraise and see whether the machine is to be purchased or not. If you recommend the management, you purchase the machine, they will purchase the machine. But if you recommend not to purchase, they will not purchase the machine. But in practice, I told you, you can make some decisions till the infinity. Say, as an example, you are constructing a highway. The lifetime, just forget the highway, just take, you are constructing a lake or tank. As an example, the Mahavali development project that started many years ago. You are constructing a constructing a tank, a lake. is that decision for 10 years or 20 years? That will be till the infinity. Just forget it. Take the what is the massive investment project in Sri Lanka in the recent past? The massive project, the huge project. What is the project? Not the Nelumpokana Tower. Very big project is there. That's the port city in the Sri Lankan history. With the port city project, the shape of the Sri Lanka was also changed. New map is required for Sri Lanka. In Colombo Fort area, what do you think about the shape of the Sri Lanka? Not only the shape, the pattern of rains were also has been changed. I have heard someone, I read somewhere, because of this change, sometimes the impact of the raining and the natural factors are also may be changed because of the port city project. Some acres were added to Sri Lankan territory. Understand? To the Sri Lankan territorial area, some acres were also added. Then it's a big project. For how many years the project is? For how many years the port city project is? Definitely, that's for how many years? 10 years, 20 years, 50 years, 100 years. That will the infinity. නේ ඒක ඉවර වෙන්නේ නැහැ නේ ප්‍රොජෙක්ට් එක. that's there. අපිට හොඳ වෙලාවට ඒ level ළමයින්ට ඔය ඉන්ෆිනිටි එක වෙනකන් decision make කරන්නේව නැහැ. Right. In universities you will learn you have to calculate the net terminal value then. For you, nothing called making decisions to the infinity. Those are also projects. Before the port city project is started, they should have done an investment appraisal. Without an investment appraisal, the port city project would have done. Understand? So, those are the projects. Now tell me, did you get the basic understanding? What is a project? What is a project? Project එකක් කියන්නේ මොකක්ද කියලා තේරුණාද? So I want your answers. Is it for a short term or long term? Is it for a short term or long term? Long term. Long term. So up to now, in your accounting life, you have never made decisions for a long time. Either in financial accounting or management accounting, you haven't discussed about a long time. All the things you have done for a short term. So when it comes to the long term decision making, some new accounting knowledge will come into the practice. You have to learn some new things. You are going to make decisions for a long term. Some factors which you have concerned up to now may not be valid furthermore to make long term decisions. See, there were some factors. As an example, the profit. Profit may not be a critical factor when you are making long term decisions. The accrued expenses. I'll discuss this one by one later. Some things you thought may not be valid furthermore. And some factors which you have not that much concerned may be very important in long term decision making. The techniques or your view to make decisions based on the existing knowledge may not be relevant to make the long term decisions. And you may require some new things to think. That's what I told. Anyway, when you take the capital budgeting techniques, right, there are some techniques. Some approaches are traditional approaches. Some are discounted cash flow methods. Right. When you are making long term decisions, the investment appraisal, some techniques are some traditional approaches. You are using some traditional methods to make the decision. According to A-level syllabus, there are two traditional approaches you should know with respect to investment appraisal. Those are accounting rate of return and payback period. These two are traditional approaches for investment appraisal. Under the discounted methods in our syllabus, there is only one method, that is net present value. Altogether, you are having three methods, three techniques to discuss here under this lesson. Techniques for investment appraisal, either accounting rate of return, the payback period, or the net present value. I will discuss these three only. So Maya is asking a question. In this, the budgeting lesson, we will be studying in accounting. Is this the budgeting lesson we will be studying in accounting? Our BS madam asked when doing financial management. No, Somaya. Budgeting is a different lesson that is not in advanced level syllabus. It's not capital budgeting. That's called as the master budgeting. Master budgeting lesson is not there in A level syllabus now. If I am correct, that has been removed from A level syllabus in the syllabus change of 2006, 15 years back. In the last 15 years, the budgeting lesson was not there in A level syllabus. The last time they tested the budgeting, I don't remember that also. Right? From 2006, the budgeting part is not there. That also not for a long time. For the next year, we prepare a budget for the next year. That's what as the budgeting, the master budgeting, sales budget, material consumption budget, cash budget. Likewise, there are so many budgets. Right? We will discuss those in chartered and universities. Right? You can even make a capital budgeting, investment appraisal, making investment decisions. వాళ్ళకి బిఎస్ మేడంට මතක තියෙන්නේ නැති එයා හිස්සර ඉගෙන ගත්ත දේවල්. ඒ නිසා මැඩම් කියන්නේ that's there in accounting but now it's not there in accounting. It's there in accounting but it's not there in our syllabus. Okay? This is not that budgeting. Okay, take the tute. Is investment appraisal. Investment appraisal, which is the planning process used to determine whether an organization long-term investments, major capital or expenditures are worth pursuing. Major methods. Many formal methods are used in capital budgeting, including the techniques as follows: accounting rate of return, net present value, internal rate of return, payback period, profitability index, discounted payback period. Right? Likewise, there are so many methods, but you don't worry. Although there are so many methods in practice, in our syllabus there are only two methods. There are only three approaches. Classification of investment appraisal methods, traditional methods, right under that, these two. Number one, accounting rate of return. Accounting rate of return. ఒకటి నమ్మకి average rate of return. Either accounting rate of return or average rate of return. Number two, payback period. Payback period. To the other side, under the discounted cash flow methods, write this: net present value. Net present value, NPV. net present value. Right. Here the first traditional method is accounting rate of return, ARR. This is pay back period. Pay back period. Pay back period. I will take this one by one and discuss. Don't worry. මම හිතුවට කොතනින්ද පටන් අරගත්තොත් ලේසි වෙන්නේ කියලා මම මෙහෙම කරන්න මම සමරයිස් කළ කරන්න නේද ලොකුවට වේට් එකක් අනවශ්‍ය තරම් අවශ්‍ය නැහැ I will summarize this in this manner so in my tute I have given accounting profit and cash flows can you I think it's better you write this in your book right no need to use the tute write a subtopic please before I discuss these methodologies one by one there is something very important to discuss with you take a subtopic accounting profit and cash flows. Take a subtopic accounting profit and cash flows. මම මේ කරන දේ තමයි very important. very very important. හරිද? මේ කැලේ දන්නේ නැතුව මේ lesson එක අපරාධේ නා ගන්න ඔයා. හරිද? This is the most critical part I am going to discuss. Accounting profit and cash flows. Please concentrate. It's very much important. අපිට රිලැක්ස් එකේ යන්න පුළුවන් මේ පාඩම හරියට මේ පාඩ එක ඔලුවට දාගන්න. Okay, now tell me how to calculate the profit. How to calculate the profit? You don't know how to calculate the profit? Very bad. Should be income minus expenses. Profit equals income minus expenses. Usually, according to which basis you calculate the profit? According to which basis you calculate the profit? According to the accrual basis. To be in accordance with the accrual basis, to be in accordance with the accrual basis, what are the special adjustments you have to make to be in accordance with the accrual basis? You know the difference, the accrual basis and cash basis. Ne? There are two methods to calculate the profit, either accrual basis or cash basis. Cash basis means cash receipts and received and cash payments. If you want to calculate the net cash, how to calculate the net cash? Cash inflows minus cash outflows. That means cash receipts minus cash payments. Right? Receipts minus payments is the net cash. Profit means income minus expenses. You know, when you take the income and expenses, you have to do the accrued expenses adjustment. Right? Prepaid expenses, income receivable, income received in advance, provision for doubtful debts. Those are not cash. Right? But you have to make those adjustments. Especially depreciation. Depreciation is not a cash payment, but you adjust depreciation to calculate the profit. So the net cash is cash inflows minus cash outflows. Otherwise, receipts minus payments. Cash receipts minus cash payments. So tell me, are these two equal? Net profit and net cash. Are these two equal? Net profit and net cash. Are these two equal? No. These are not equal. Why these two are not equal? So the net profit does not equal to net cash. Why? Why these two are not equal? Why these two are not equal? I may think equal nothing. Yes, these two are taken according to two bases. Yes, Juliet, I fully agree. I mean, what are the factors affect to this difference? What are the factors affect this difference? Accrued expenses, prepaid expenses, as I told, right? Accrued expenses, prepaid expenses, depreciation, provision for doubtful debts. These are the reasons. Net cash is the actual amount received and spent, but net profit is the actually earned or spent. Yes, very good. Now, I am going to uh, change your perspective into a different aspect. You know, in short run, the accrual basis is compulsory to use. So in this year, from your answers also, I get it. Right. If the electricity bill is 5,000, but you paid 4,000 only. Therefore, when you calculate the profit for this year, you don't take 5,000. Sorry, you don't take 4,000. As you have paid 4,000, the cash impact is only 4,000, but the bill received is 5,000. Therefore, the electricity expense is 5,000. You will argue with me with 1,000 arguments. Now you know it perfect. No, sir, you must take 5,000 to calculate the profit. The relevant amount is 5,000. But you just think we are going to make these capital decisions not for a 1 year, it's for a years of time. If I say something like this, the electricity bill you received in this year is 5,000. From that you paid 4,000 only. The 1,000 you consider as accrued. But the accrued bill will be paid on next year. Right. If you look at the history after 5 years, now the 5 years gone. So when you concern the 5 years, all the accrued expenses were subsequently paid in cash. Do you agree with me? When you take a long term, accrued expense of 1 year had been paid on another year. So when you are going to make decision for a long time, say in the third year you are expecting an electricity bill, whether it's paid or not, in that year, definitely that would have to be paid. Understand? Therefore, when calculating the profit, the accounting profit for the long run, the factors like accrued expenses, prepaid expenses, income receivable, income received in advance, provision for doubtful debts, those are not major factors. The argument is if the bill is accrued in a certain year, definitely that will be paid in the future. No need to much bother on that one. Therefore, remember when it goes to the long run, we are not going to concern these type of silly factors. Accrued expenses, prepaid expenses, don't take those. In the long run, the thing is, when you are going to make the decision, the accrued bill in the fifth year is not practical. No need to take anyway, that will be paid. Therefore, it's argued to make long term decisions than the profit, the cash flow is a better approach. For the long run, don't think much on the net profit. Take the cash flows, cash receipts, and cash payments. If you get money and if you pay money, that is much constant, much accurate than calculating the relevant amount. Anyway, when you pay the cash outlay or cash receipts. Therefore, when making decisions for the long run, it's argued that the cash flow based calculations are much appropriate than using profit based calculations. Take the cash flows. In the third year, this will be the cash receipt. This will be the cash payment. Understand? But if you calculate in the third year, this will be the profit. The profit is not that much suitable. And one more thing. I told you the accrued expenses, prepaid expenses, and these type of immaterial things are not concerned when it goes to the long run. But still, when it goes to the long run also, there is one factor that cannot be eliminated. There is a major factor which definitely make a real change in between cash and profit. That factor you cannot eliminate even in the long run, that is there. What is that factor? The major factor which differentiates profit and cash, that will be the depreciation. Very good. The depreciation factor, it's definitely there. You cannot eliminate the impact of depreciation. You can just forget accrued expenses, but you can't forget depreciation. It's a major factor. Remember, when it goes to the long run, I told you, the most appropriate basis for decision making is not the profit, that will be the cash. But there are some approaches where we are going to use the net profit even in the long run. But it's argued, don't use the net profit. That may not be much accurate. Better to use the cash flows, cash receipts, and cash payments. But anyway, when it goes to the long run, when you take the net profit and net cash, it's not equal, it's different. Net profit and net cash flows, net cash is different. In the short run, there are so many factors affect to this difference. In the short run, accrued expenses, prepaid expenses, so on, there are so many factors. But remember, when it goes to the long run, we consider the only factor which affects to the difference between net profit and net cash is what? In the long run, what is the major factor affects to the difference between net profit and net cash is nothing but depreciation. Is nothing but depreciation. Is depreciation. It's very, very important factor. In long-term decision making, net profit anyway does not equal to net cash. The difference is depreciation. Don't write, I will summarize those. Therefore, net profit equals income minus expenses. When you arrive at the net profit, tell me, have you considered depreciation? When you are taking the net profit, have you considered the depreciation? Yes. 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 Good. When you are calculating the net cash, have you taken depreciation into your consideration? No. No. Therefore, if I summarize something like this, cash receipts minus cash payments is what? Cash receipts minus cash payment. What is this? Cash receipts minus cash payment. What is this? This is net cash. This minus depreciation. What is this? This is net profit. Do you know how important this is? Very much important. දන්නවනේ සාමාන්‍යයෙන් අපි ක්ලාස් එකේ බොහෝ වෙලාවට සමරයිස් කරලා ඉගෙන ගන්න පාඩමක් නේ. අනවශ්‍ය බහුබූත නැතුව අපි ෂෝට් කරගන්න. ඒතර අපිට ලේසි. Right? So this is the best way to short this lesson. Net profit equals income minus expenses. Net cash equals cash receipts minus cash payments. In long term decision making, net profit doesn't equal to net cash. Right? The only factor is depreciation. Therefore, cash receipts minus cash payments is net cash. That minus depreciation is net profit. You understood my summary. Did you understand this summary? Is this understood? The entire story. ලොකු කතන්දරයක් ෂෝට් කළේ. Then, good. Then, let's look at this. Look at this. Initially, I told you, right? Initially, I told you, there are some traditional approaches and discounted approaches to make long-term decision making. There, in case the technique is based on the profit. So if you are told, make this decision based on the profit. If it asks you, see whether this is based on the profit, right? You must concern the depreciation. Read the question carefully whether they have deducted depreciation. If they haven't deducted depreciation, it's not the profit. It will be cash. So, if you are going to make the decision based on the profit, if it is a profit based approach, you must deduct depreciation. Make sure that the depreciation has been deducted and you have obtained the profit. But if you are going to make the decision based on cash, then make sure the depreciation is not deducted. In the exam, sometimes the decision is made based on cash flows, but you are given the profit. When arriving the profit, the depreciation has been deducted. You have to add depreciation back to get the cash flows. Okay. Sumaya is asking a question. Yes, but what about the immaterial accruals? Forget it. Forget it. Don't think of the immaterial things in long-term decision making. The thing is that in the long run, the decision may not be 100% accurate to the last cent. Right? When we take the cents to the last cent, that will not be accurate. Right? That will be not accurate, but it will be materially okay. Understand? When you are forecasting details for the coming 10 years, right? No need to forecast the accruals, right? Forget it. But compute the depreciation. That's what I told. Okay, shall we summarize this? What is the topic I ask you to write? That is accounting profit and cash flows. Is it? Accounting profit and cash flows. Okay. Now show this. Net profit equals income minus expenses. Net profit equals income minus expenses. Accounting net profit equals income minus expenses. Net cash equals cash receipts minus cash payments. Cash receipts minus cash payments. Right? In long term decision making, no, any memory, no need to write this one. Net profit doesn't equal to net cash. The reason is depreciation within bracket you can write in long run. Nathan, there are so many factors in long run. Net profit doesn't equal to net cash. The reason is depreciation in long run. Therefore, cash receipts minus cash payments, that is net cash. Cash receipts minus cash payments, this is net cash. Minus depreciation, answer is net profit. Okay, write this question. A business is planning to business is planning to purchase the machine at the cost of rupees 500,000. At the cost of rupees 500,000. Scrap value of the machine after 5 years. Scrap value of the machine after 5 years will be rupees 100,000. Scrap value after 5 years will be rupees 100,000. Following details are given. Here 1, 2, 3, 4, 5. Cash receipts all in 1,000. Cash receipts 200, 250, 320, 300, 280. cash payments 50, 100, 120, again 100, 130. Required. Calculate the net cash flows and net profit. Number one, calculate the net cash flows and net profit of each year. Calculate the net cash flow and net profit of each year. Number two, calculate the average net profit of the project. Calculate the average net profit of the project. Adan bolan. Let's see the answers. Now, here 1, 2, 3, 4. Cash received 200, 250, 320, 300, 280. Cash payments 50, 100, 120, 100, 130. Net cash 150, 150, 200, 200, 150. This minus depreciation. How to calculate the depreciation? Cost is 500, cost minus scrap value 100. This is divided by 5, 18. Right? This is net profit. 70, 70, 120, 120, 70. You got this? Although, did you get these answers? Now, how to calculate the average profit? How to calculate the average profit? Average profit is total profit divided by years. You have to add all these profits. 70, 70, 70. 210, 210 plus 240. 450. This is divided by 5. Average net profit is 90,000. Is it clear? Understood? Ne? Then accounting profit කියන එක තේරුණාද? Net cash කියන එක තේරුණාද? Average profit කියන එක තේරුණාද? Right. So then we will move into the first investment appraisal technique. Write the topic accounting rate of return. Accounting rate of return. Accounting rate of return. Otherwise, average rate of return. එකට තව නමක් කියනවා average rate of return. discounting rate of return, or otherwise average rate of return, ARR. Right. Remember, this is the easiest one. ARR, or the average rate of return, is a percentage. With respect to a project, we calculate the average profit of the project as a percentage on the investment. Very simple. ARR equals, don't write, ARR equals average net profit of the project is divided by the investment. This is ARR. It's a percentage. How to calculate the average net profit? In this way, calculate the net profits of the project, and which is divided by the number of years. Then you will get the average net profit. This is the investment. Understand? In this example, average net profit is 90. Your investment is 500 into 100. That is 18%. So the ARR of this project is 18%. Is it hard or easy? අමාරුද ලේසිද? Very easy නේ. කවුද මේ අමාරු කියන්නේ? But you must remember, this is what? Average net profit. This is a profit based technique. Net profit means make sure that you have deducted depreciation in profit calculation. You must deduct depreciation. If you are given the cash flows, make sure that you have deducted depreciation. Okay? Okay. Right under that. Presentation of average net profit of a project. Like a note. Presentation of average net profit of a project. Presentation of average net profit of a project. Presentation of average net profit of a project. As a percentage on investment. As a percentage of on investment. As a percentage on investment. Right? As a percentage on investment. Then write the calculation of average net profit of a project as a percentage on investment. Show this. ARR equals average net profit divided by investment. Just give me 1 minute. පොඩි වෙලාවක් දෙන්න මම මේ that was something urgent, right? Now, okay. Right. Thank you for the patience. Sorry. Well, so I was saying ARR, average net profit divided by investment. Okay. Yes. Then one more thing. Better we discuss this with a question. Write a question again. No, Memakalu. I think yes, you can understand. When you take the ARR, average rate of return, average net profit divided by investment. In exams, this may be asked in two different patterns. The investment may be either initial investment or average investment. So ARR may be calculated according to two techniques, two bases based on the initial investment. So if I take the initial investment, in this example, that is 500,000. If the ARR is calculated based on the initial investment, ARR on initial investment, at the top, anyway, take the average net profit that was 90. Initial investment is 500. 90 over 500 into 100, it is 18%. If you calculate the ARR based on the average investment, ARR on average, average investment means at the top anyway, average net profit. In this case, you divided that by the initial investment. Here you have to put the average investment. Average investment means initial investment plus scrap value divided by 2. This is how you calculate the average investment. So in my example, here this is the initial investment 500, this is the scrap value. Therefore, 500 plus 100 divided by 2, it's 300. Remember, this is not minus. Initial investment plus scrap value. Before you ask the question, here we are calculating how rich the investment is. Say you started the project by investing 5 million today, 500,000 today. After 5 years also, there's a certain value. So that's why that amount is taken the scrap value. Understand? Because today you are investing 5 million, that's for 5 years. After 5 years also, certain value is there in the investment. That has a scrap value. That means a certain amount is there till the project close, 500,000, and still at the end of the project also 100,000 is there. Consider that also, because the profit is average, so the investment also should be average. That is the argument. As the profit is average, investment also should be average. If you take an initial investment today to compute the average profit, average ratio, that may not be proper. Therefore, there are two methods to calculate ARR. Number one, ARR based on the initial investment. If it's so, just take it as it is. Average net profit divided by initial investment into 100. If you are asked to calculate the ARR based on average investment, average net profit divided by average investment. How to take the average investment? Initial investment plus scrap value divided by 2. Then you ask, sir, what happens if the method is not stated in the question? Just calculate ARR. Is it based on initial or average? Yes, that's the problem. If the question is asked in that way, marks will be definitely given for both answers, because we don't know what is the method you have to use. But I have seen in some past papers, when the method is not specified, the answer was given according to the average investment. Right? Therefore, if the method is not given to you, you can calculate the ARR based on the average investment. But I'm sure that will be given. In case the way to calculate is not given, calculate that based on the average investment. Tell me honestly, is it clear? හරි. මම වෙන එක්සාම්පල් එකක් පස්සේ ගන්න අපි මේක හදලිමු නේ right okay did you yes I remember you wrote this one now write a note ARR can be calculated ARR can be calculated ARR can be calculated based on ARR can be calculated based on initial investment O based on initial investment O average investment ARR can be calculated based on initial investment O average investment ARR on initial investment equals right as a formula ARR on initial investment equals average net profit divided by initial investment into 100. Average net profit divided by initial investment into 100. Then ARR on average investment equals average net profit divided by average investment into 100. Average investment means initial investment plus scrap value divided by 2. This is plus not minus. Make invest in minus kala hidden pula mukada samanya to calculate depreciation you take cost minus scrap value but this is not minus this is plus the value of the project at the end of the period that is the argument right calculate the ARR for the above project අපි කලින් ගන්නට හදලා මෙතන හොඳයි මම earlier I wanted to write a separate question but I think you can take this calculate the ARR for the above question under calculate the ARR under above two calculate the ARR for the above project under the given two methods under given methods right write the formulas and calculate Finish. When you go to the first one, it's 18%. Under the average investment, that is it 30%? 30%. Right. Now take my tute. In page number 20, question number 1. Page number 20, question number 1. Read, understand, and do that. Page number 20, question number 1. You will have that. Finish. This is a question. A company is considering a new project, required rupees 200,000 as the initial investment. Net profit of the project within next 5 years, you are given the net profits. Ne? Straight away you are given the net profits. Just add these. එතන මෙතන ආයේ depreciation අඩු කරන්න එපා, right? You are given the net profit. 50 plus 100. 150 minus 50 is 100. It's 300. 300 divided by 5. 60. 60 divided by initial investment 200. Did you get this 30%? Yes. When it is calculated on the average investment, net profit is 60. There is no any scrap value. Therefore, take the scrap value as 0. 200 plus 0 is 200 divided by 2 can 100. Ne? It's 60%. Correct? Did you get this 60%? Now do the second question. Question number 2. Ikma kara. You are given 5 years. The company is considering a new project, required 500,000 as initial investment on machinery. Scrap value of the machine after 5 years is estimated as 200,000. Net operating cash flows. You are given the operating cash flows. 250, 150, 225, 175, 200. Is this profit or the operating cash flows? Is this the profit or the operating cash flows? Cash flows. You have to deduct what? Depreciation. Ne? Then only you can take the net profit. If I add all these five, total is 1000. Depreciation 500 plus 200 is 300. So the net profit is 700. 700 divided by 5, 140. ARR on initial investment 140 divided by 28%. On the average investment 140 divided by 500 plus 200, 700 divided by 4 කියලා කියන්නේ 350. 40%. හරි ඉන්වෙස්ට්මන්ට් ඇප්‍රේසල් වල මූලික ටික තේරුණාද ඔයාට? First, the basic things. මේකේ තියෙන critical thing is what? Cash flows and profits. Right. Right. I think that's enough for the day. And next week also the Monday I won't be able to do the class. The Tuesday class will be extended, right? Because I have started a seminar series. Because all now we have covered your syllabus, and the Monday class is an extra class, right? මම වලට අවුරුද්දකට වඩා වැඩි කාලයක් එක්ස්ට්‍රා ක්ලාස් එකක් කන්ටිනියස්ලි කරගෙන ආවා, right? ඉතින් මේ සාමාන්‍ය අපි සතියේ දවසයි පන්ති කරන්නේ, but I did 2 days නේ. I'm not going to stop that one. Monday class will be done when I get the time, because දැන් ඔයාලා හිතන්නේතර යනෝනේ අපි දාලා ඉතින් මාස ගන්න කෙනේ ඊට පස්සේ ඉන්න අයගේ වෙනුවෙනුත් අපි වැඩ ටිකක් කරලා එයාලටත් අපි මොන හරි වැඩ කරන්න ඕනේ. ඒ නිසා so I had no any time, therefore I started some seminars. Then the Monday also there's a seminar. Then after that one, no problem. This is not a fixed class. I took that time to do a seminar for 2022 A-level students. No problem, right? Then next week also the Monday class is not held. The Tuesday we can do the class in normal way, right? The Friday class is there, the revision session normally, right? Good night.